So corporate actions remains operationally critical. COVID-19 has highlighted that people have had to enact their BCP policies, and this has put a lot of operations under strain. So whether that be the workload being dispersed across a smaller team, whether them not having high levels of automation, putting strain on a dispersed team, whether they have had attrition within their teams and left more junior members who lack knowledge, or whether it be there needs to be an accommodation of market changes. It's a swift release coming up in the autumn. Everyone needs to comply with that. It was not deferred. And so the situation that we're in today has put a lot of these departments under strain. We're also seeing a few changes in the marketplace whereby COVID-19 has caused economic strain. So we expect to see an increase in liquidations, an increase in bankruptcy events. And we're also seeing for most listings an increase in the ratio of debt to earnings. And that means that we're expecting to see reorg events where compensated losses will be replaced with a future, and synthetic instruments could also be offered. So recently, everyone's rolled out enhanced reporting to be compliant with MiFID II, where election outcomes are specified, and that's been rolled out across the board. And in September, we'll see the Shareholder Rights Directive number 2 come into action as well. They're the two main changes that we've seen recently. So focusing on Shareholder Rights Directive coming up, that's being adopted across 27 EU member states. They're transposing that into their local law. All listed equities in the associated markets will be in scope. So if you own something listed in Europe, you'll have to comply with Shareholder Rights Directive. There will be penalties levied within the individual member states for non-compliance. And so people are taking it seriously and are looking to not be in breach. This will impact institutional investors, asset managers, proxy advisors, and intermediaries through the whole entire shareholder value chain. And although it's primarily focused on proxy voting, it does have an impact on disclosure reporting and general best practices for corporate actions processing. So there are 4 main areas, and just as a rough summary for compliance with Shareholder Rights Directive, you need to be able to be compliant with Section 3C, which is to be able to facilitate rights electronically. That is to be able to elect and or vote and do that in a transparent way. And so there are a bunch of transparency items in Section 3G, H and I related to disclosing how you are applying your investment mandate to the decisions that you're making and any deviations as well, to be able to make that clear to the issuers who are issuing the meetings as well. And so lots of firms need to invest in their portals, making that available to the beneficial owner to be able to record the elections and the voting, as well as being able to prescribe decision-making criteria for those elections and votes. Another area of focus is being able to notify of an event within a 24-hour period, and this creates a time pressure that is best relieved by systematic processing and control and validation. Also, a large part that's been introduced is disclosure of shareholders. That's Section 3A, and being able to disclose this will be a workload burden for a lot of operations, and so being able to manage that in an automated way is also a challenge. And then for different institution types, there are certain regulations for proxy service providers and custodians to be able to justify the costs that they charge, and also abide by certain governance and best practices in the way that they operate.